In crypto trading, identifying trends and momentum can make or break your strategy. One tool that stands out for its ability to cut through market noise is the Keiken candle. Now, if you haven't explored this technique yet, let me walk you through why it's an absolute game changer for smarter trading. I'm not a financial advisor. What are Keiken candles? Let's start with the basics. Keiken translates to average pace in Japanese, and that's exactly what these candles represent. Unlike traditional candlesticks, which focus solely on open, high, low, and close prices, Keiken smooths out price action to highlight the broader trend. Instead of seeing every jitter, you see the bigger picture. Now, here's how they work. Green candles show upward momentum, while red candles indicate downward trends. But the magic lies in how those candles are calculated. Each one is derived from price averages, creating a smoother visual flow. For instance, the open price is averaged with the close of the previous candle, and the close price is calculated as the mean of the open, high, low, and close. Why use Keiken candles? Picture this. You're looking at a traditional candlestick chart, and it's an alternating mess of red and green. Now switch to Keiken. The erratic ups and downs give way to longer streaks of consistent color, making trends much easier to spot. That's the power of Keiken. These candles also excel at showing momentum strength. For example, green candles without lower wicks suggest strong bullish momentum, while red candles without upper wicks indicate strong bearish pressure. If both wicks are long, it might signal market indecision, a potential turning point. How to use Keiken candles in your strategy. Let's talk application. First, use them to identify clear trends. If you see a long streak of green candles, the market is likely in an uptrend. Red candles, of course, suggest a downtrend. But here's the kicker. The smooth transitions help you avoid reacting to every minor fluctuation. Next, combine Keiken with other indicators. Tools like RSI or moving averages work beautifully here. For instance, if RSI shows oversold conditions and Keiken candles start turning green, you've got a strong signal for a potential reversal. Another pro tip, use wicks as clues. No lower wick on a green candle, that's a strong buy signal. No upper wick on a red candle, likely a strong sell signal. When you notice wicks on both sides, it might be time to tighten your strategy and prepare for a reversal. Avoiding over trading. One of the benefits of Keiken is how it helps you stay in trades longer. Instead of jumping ship at the first sign of a reversal, you can rely on the consistent color streaks to ride the trend. Exit only when the candle's color changes or another indicator might confirm a shift. This reduces emotional decision making, which is bad, of course, and it keeps you focused on the broader trend. A practical example, imagine you're trading Bitcoin. Traditional candlesticks show alternating colors during a volatile session, making it hard to gauge direction. But when you switch to Keiken, you see a steady progression of green candles. You hold your position, confident in the trend, and avoid the temptation to exit prematurely. Later, the candles start to show wicks on both ends, signaling potential indecision. That's your cue to start watching for a reversal. Final thoughts. Keiken candles are an invaluable tool for any trader looking to refine their strategy and reduce noise in the market. By highlighting trends and momentum, they give you the confidence to make smarter decisions and stick to your plan. At the BitBoy Bootcamp, we're all about equipping you with tools like these to elevate your trading game. Start experimenting with Keiken candles today and let the trends guide you to success. 10-4, BitBoy out.